Hello guys, so a pre-week analysis of what I'm watching for next week. I'll start with the dollar index in the weekly time frame just to first see how the last week behaved. So if you check last week's candlestick, you can see that price traded high, very high, then it came and closed very low, meaning that buyers were rejected because buyers pushed price higher, but the sellers came and rejected the buyers all the way to this point. So you can see that's a sign that, the dollar was weak eventually by the time the week was closing. If you look at the daily time frame, you realize the same thing. The very last day, which is Friday, we had a very, very long bearish engulfing candlestick. So if you look at the dollar technically, you will see that we have this sense of bearish momentum where price is actually trying so much to trade lower. As you can see, on Friday, we saw a very, very strong bearish move. But fundamentally, the dollar news has been coming out very positive. That's the interest rate which came out this previous week, and the non-farm payrolls, the NFP. Both of them came out positively, and as you can see, when the interest rate came out positively, which was I think on Wednesday on Thursday, the markets reacted well and they pushed higher because that's what you expect when the news is positive, the market will be strong. But the NFP came out positive, but the market did the exact opposite. So looking at the dollar, I can sense that we have that sense of confusion because price is actually trying to trade lower, but um, there's still no strong confirmation to actually say that the dollar has reversed or the dollar is reversing to become bearish. So what I do is that I trade using supply and demand. So I'll mark this previous demand zone. In fact, the last time that I used this demand zone, I wanted to see how price behaved here. Because at a demand zone, we're expecting buyers to be strong. What happened is that when price traded back to this demand zone, we saw the buyers pushing price even higher. So that is how we trade using supply and demand. So with this demand zone, what I'm looking for on the daily time frame is that as long as price is unable to break below the demand zone, if price can't break below here at this point, I still can't have any strong reason to say that the dollar has reversed completely. It's very possible for the dollar to even trade all the way to this zone here and you see it even reversing and continue to become bullish, especially if you're going to have more fundamentals coming out positive in the course of this month. But anyway, I'll just be looking to see how the dollar behaves. There's still a possibility that the dollar could drop further to this demand zone here, further, or maybe even make a complete reversal. But the point is, at the moment, you cannot claim that the dollar is reversing completely. You still don't have the confirmation, but there is definitely an indication that the dollar is quite weak for now. So I'll just be watching to see how the dollar behaves in the long run. Yeah. Looking at AUDUSD from the weekly time frame, price came and traded back to this neckline here. And then we are seeing some sort of rejection when price traded back to the neckline, which is sort of expected. So now the question is AUDUSD reversing completely? Is it just retracing? Or is it just playing around and it will continue dropping? So I'm looking for two possible things. Number one is that for me to have the sense that AUDUSD wants to become bullish for a while, price must break this previous high so that we can have a break in market structure. So if price can come and trade above this high and we have a candlestick close on the daily time frame, that means that there will be some sense of confirmation that AUDUSD is now becoming bullish. But remember, if you zoom out your chart, you can see clearly on the daily time frame for the longest time, AUDUSD is in a very clear downtrend. So when price is becoming bullish, does it mean that it's reversing completely? It's going to buy all the way back to these highs? Or is it just a small retracement? So again, you can never know, but what you do, you just anticipate. So if at all we will get the confirmation that price will break above this high, I'll be expecting a retracement. So I'll come and use my Fibonacci ret retracement tool from this high to this low, extend it to the right. And then what I'll be looking for is for price to retrace minimum to the 50% level, preferably to the 61%, and maximum somewhere to the 70% level. So just come and mark this zone. So in the case that AUDUSD will break the market structure at this point, I'll be expecting it price to retrace a little bit. Then we can see it go back to the 50 or 61% Fibonacci. So from this point, we'll now have to see how price will behave before we can tell whether it's going to continue going up or if continue the downtrend. So that's what I'm basically looking for on AUDUSD here. Next is EURNZD on the weekly time frame. Without a doubt, we can see that price has been forming some sort of bearish pattern, and we have very long body candlesticks. In fact, if you can interpret the last three candlesticks, we'll start with the immediate one. Price is very bearish. The previous one, we have a rejection here up, meaning that price was buying, then the seller rejected. And the third candlestick previously, price sold strongly. So both of these three candlesticks in a nutshell are just indicating that price is strongly bearish. So on the daily time frame, you can see on EURNZD we've had a very clear bearish pattern at this point and a breakout. Just mark it to show you. We had this sort of bearish pattern, price traded higher, lower, formed some sort of pattern, then it's been dropping. So this is actually a bearish pattern. So on the 4-hour time frame, what I'm looking for on EURNZD so far is a possibility of a further downwards confirmation. But the question is, where are we looking to get into our trade? I'll come and mark the previous supply zone from this previous high to where that breakout candlestick ends, which is here below. Extend it to the right, that becomes your supply zone. So what I'll be looking for on EURNZD, preferably on the 1-hour time frame, is for price to come back, just a minute, price to come back and trade to this zone. And if we get a good bearish pattern like an M or a head and shoulder, whatever, this will be enough confirmation for me to get into my trade. And I'll be expecting a further downward stop. So far, that's what I'm seeing based on the current market structure. AUDJPY, the weekly time frame, I can see that price has been bullish for a while. Then we've been having this sort of rejection candlesticks here below, another one. So on the daily time frame on AUDJPY, price is still bullish. Same thing, we've been experiencing some, rejection candlesticks there. We had another one at this point, and the last one happened just here. So this is AUDJPY on the daily time frame. But so far you can see that the price has been bullish. Then what happens is that price traded back to this neckline here. Let me mark this neckline. And as you'd expect to get some rejection, that's exactly what happened. We got sellers got rejected at this zone. Then we've seen bullish momentum, some retracement. Then again on Friday we had strong bullish momentum. So on AUDJPY, it's very simple. What I'm looking for is possibility for some retracement and then strong bias. That's if this demands on holds. But in case price comes and trades below this zone and breaks out, then we might see it dropping further to where this move started somewhere below. But so far, I'm just giving you both possibilities so that you can be open-minded, because you can't really have a rigid mindset. You never know where the market is going. But I'm just giving you both possibilities. But remember, the best probability setup is the one that is respecting the trend. And so far the trend is in an uptrend, and you can see we are forming high highs, higher lows. We are getting rejected at the demand zones, which is a good sign. So at the moment, the best probability setup will be the one that is telling you to go to the direction of the trend, unless the trend reverses. So that's what I'm looking for in AUDJPY. GBPCAD on the weekly time frame, the previous week candlestick was very bearish, and then it closed with some sort of small rejection. Same thing on the daily time frame. The previous day, the very last day of the week, which was Friday, the candlestick closed with strong rejection below, which is an indication that the sellers have been rejected here. So on the 4-hour time frame, you see the very same thing. Price has traded back to this demand zone here, then it's first time rejection. So just before I even break down the trade, let me just show you what I'm looking at. If you look at the daily time frame, you come and mark this previous high, which was at this point. Price came and traded above the high. Whenever that happens, we say that we have a break of market structure. The break of market structure is a sign that the market could be reversing, possibly. Just remember, it's a possibility. It doesn't have to reverse. That's just what the break of market structure means. So when you have the break of market structure, and then what you're trying to look for is a possibility that now this pair could reverse from being bearish to becoming bullish, right? So if you look at the 4-hour time frame, you can see that price has traded back to the demand zone. This candlestick, that's a very clear demand zone. And what has happened is that we had this rejection, and now we have some two bullish candlesticks. So that could be a possibility that price could continue going higher and respect the break of market structure, or it could still go lower. But as I've told you, try to look for the trades that are in the direction of the trend. If you do that, most of the time you're going to be winning. You might hit a few stop losses, but most of the time you're going to be winning. Also, if you're trading at the direction of the trend, you're more likely to have a very good reward. That means if you are risking, let's say 1% of your account, you're more likely to have a better reward as compared to trading against the trend. Because if you're trading the retracements, then at any time the price can cut you short, then the market continues with the trend direction. But if you're trading the trend direction, for instance, at this point, if price hits your stop loss will be very small, just somewhere below this low. But if the price decides to go and respect the trend, you'll get a very, very good reward. So this is what I'm looking for in GBPCAD. If price continues to the trend direction, um, I mean, in regards to the break of market structure, I'm looking for a bullish continuation. In the case that price will break below the structure, then I'll be expecting it to continue dropping all the way to the beginning of the previous demand zone, which is somewhere here. So I'll be expecting it to drop in the case that price trades below the demand zone. Basically, that's it. On EURCAD weekly time frame, price related back to this zone. So we've had some series of, the candlesticks of some confusion. They're not really moving up or down. They're closing with rejections. As you can see, there is no clear direction here because the candlesticks are just playing around the same zone. The previous week candlestick closed with a strong rejection to the downside. Looking at the daily time frame, you see the daily time frame closed with a very, very strong rejection to the downside, which means that the sellers were rejected by the buyers. I want you to see the last time we had such a similar thing on EURCAD. I want you to see what happened. Last time we had such a similar rejection on the daily time frame. What happened next is that price came and did what? And pushed higher. So is it possible that we can see the same thing? We don't know yet, but we're just trading with the possibilities. So anyway, it's very possible to see price continue to trade higher because of the immediate price reaction. Also, if you come and mark the demand zone, the demand zone hasn't been broken because we draw it using this from this low to the breakout candlestick. You extend it to the right, that becomes the demand zone. So this actually is a very good price reaction because the demand zone, price tried to break below the demand zone. Remember guys, we only use the candlestick that has closed, not the shadow. Price tried to break below the demand zone, but it was rejected with this shadow. It ended up closing above, then we had an engulfing candlestick and a bullish candlestick. So what I'm looking for in EURCAD for a time frame, price could play around here, then we see it continue buying eventually, or in the case that it breaks below the below the demand zone, we could see it trade to the next demand zone, which is somewhere here where this price started, or somewhere here below. That's what I'm looking for on EURCAD.